South Africa's Chamber of Mines has offered a 4% pay rise to workers in the country's gold industry. Now, that essentially amounts to just a fraction of the 60 to 100% rise demanded by trade unions in salary talks billed as the toughest since the end of apartheid in 1994. The Solidarity Union, which represents mainly white-collar workers, said the gulf between the two sides is a sign of the exceptionally challenging weeks of negotiations that lie ahead. Now, the country produced just 167 tons of gold in 2012. That's down from its zenith in the 1970s, when South Africa was yanking about 1,000 tons of this precious metal out of the earth every single year. Some South African mines operating 4 kilometers or more underground, and that's a depth that imposes enormous costs on companies that have also seen a 25% fall in the price of gold since the start of the year. Elsewhere, the United Nations is warning that trade between African countries continues to decline, despite a concerted effort by governments to boost it right across the continent. A new report now calls for changes in the continent's development models to ensure that it can sustain not only its current growth rate, but future ones as well. And this analysis comes amid what some analysts have called an exodus of capital from emerging markets. With the details from South Africa, here's CCTV's Guy Henderson.
It's no surprise that Chinese exports are slowing, but a drop of 3.1% in June has shocked the markets. Imports are down too in the world's second largest economy. Grim news at a time when investors are already beginning to refocus.
What traders did is they were able to borrow money in those countries at no interest rate, virtually interest rate, and they started to use that money and bought into emerging markets where interest rates were higher. So what are we seeing, if you can get the picture, is a reversal of that process. A reversal of the process where you're now selling the rand and you're selling bonds and taking it back to the United States.
While emerging powerhouses like Brazil struggle with public protests and rising inflation, the US dollar strengthens. America's main indexes hit record highs. It's led to talk of a possible rebalancing after more than a few years of stagnation in Western economies. For Africa, falling commodity prices are also likely to hurt. Although, as Barack Obama's visit here last month shows, the continent's still seen as a decent prospect, given its impressive growth rates. Analysts say that as a gateway, South Africa might prove more resilient than its BRICS partners.
One thing that South Africa does have going for it, it does have the rest of the continent as its market. And if the private sector in South Africa can gain momentum both here and in the rest of Africa, then I think South Africa is maybe better positioned in that sense. But that means though that there has to be more synergy between government and the corporate.
There are obstacles though. For one thing, a new UN report out this week shows intra-African trade has been declining, despite an effort to boost it. That same report calls for African countries to up the value of their exports, and that is an area that it has been historically weak at. Now, investors are a fickle bunch, of course, so who's to say whether that money trail might yet reverse again? But if it does turn into something more, South Africa is quite well placed to weather the storm, but it's unlikely to be immune from it. Guy Henderson, CCTV, Johannesburg.
Let's make a quick run through the markets. Broadly positive numbers that we're seeing out of both ends of the continent, quite literally. We're starting, of course, as we usually do, in Nigeria. The all-share index up by just under a percentage point in trading so far today. The South African index providing the only red numbers on our board so far, down by 0.16 percentage points. The 20-share index in Nairobi up half a percentage point, and the EGX30 in Egypt also up by just about 0.4.